All right, here we go. Hello, this is Brad Wiseman, and you're listening to Real Estate and You, where, well, I can tell this now that every month you're going to hear Justin and I talk about mortgages. Yippee. And May 20th is the next show. Today is April 29th, so May 20th you'll see us again, and you'll hear from us again on this podcast. So that's what this is about, all about mortgages. So here we go. We'll talk about some mortgages and what's going on in this market that we have going on. What's up, Justin? How you doing? I don't want to bring up that you were really, really late, but I think I'll bring it up anyway.
I was early for 2 o'clock.
Okay, that's good. You're what? Early for 2 o'clock?
Early for 2 o'clock.
Yeah, that's good. So, so what we wanted to talk about today is we are going to do this show every month. We now have it down as the third Thursday of every month. So when you want to hear about mortgages or update on mortgages, this is going to be the place to tune in at 1 o'clock on the third Thursday, which in May would be May 20th. So that's our little plug on when we're going to get things started for the monthly show.
That's good. So just real quick, please write into Brad.
Yeah,
his email.
Absolutely.
If there's anything you want me to talk about,
yes, please.
Anything you want to ask us, just
any questions, or any topics. If there's a topic that you think we are not covering and that we should cover, then let us know, and we'll look at that and we'll research it and come back to you with the best information that we can.
Yeah.
Okay. Sound good?
Yes.
All right. Perfect. Sounds good. So I wanted to first get into the normal question.
Sure.
What are rates doing?
Mm-hmm. Well, people were panicked.
Mm-hmm.
I mean, it did go from 2.75 to 3.
Oh, geez.
So we needed to board up our walls.
Well,
we cut costs.
Yeah, my wife and I got a bomb shelter, so we're good now. just in case.
It's I'm not going to pick on millennials. Well, because you have not seen rates above 5.
Oh, that's so true. So you're saying millennials have never seen the rates above 5?
Not to my knowledge.
Wow.
My first mortgage.
That's amazing.
Was 5 3/4, 5.75, and that was a good 10 years ago, 15 years ago.
That's incredible.
So, they wouldn't.
And I think we talked about this before. The highest that I've seen in my career was 9%.
Yeah,
I think 9% was the highest that I saw. And I remember, when they started dropping, I remember seeing it go to 7%, and we all were just going nuts.
Can you
thinking,
imagine?
oh my gosh, if it ever gets to 6, just imagine what that's going to do to our business.
Try
and
2.75. I mean,
it's insane. It's almost like free money.
Yeah.
It definitely is interesting. So the rates are still good.
Yeah. 3 1/4, 3.375. But again, you're talking about 10, 15, 20 at the most difference in payment. I'm not discounting, $240 a year,
no, of
but
course not.
Yeah,
you can't discount anything. Depends on your budget.
But it's not life changing.
It's not life changing. It's not.
So they're hovering well. Investment properties still a little bit higher. For some reason, the second homes and investment properties, and we'll get into that topic probably another day, but they're still 0.5 point to 3/4 point higher.
Well, it's more risk for the bank.
Sure.
I mean, anytime you talk about second home or investment property or whatever you're talking about, it's more risk. And when there's risk, they have to make it up by charging more in the interest rate.
Correct.
So it's
Good
not
job, Brad.
not a bad deal, right?
The brain's on Brad.
Yeah, the brain's on me. Yeah. Sometimes when there's a mic in front of me, I sound smart, which is pretty amazing.
Or you sing well.
Oh yeah, that doesn't happen often either. But so let me just talk that we discussed. We are going to do a show.
Yep.
Most of a show around second homes.
I think it's a good idea.
I think it's a really good idea. I think that's because we came up with it. So it has to be a good idea.
And investment. I think maybe we can fit both in, but I think I've been seeing a lot of younger buyers buying investment property before primaries.
And that's great. I mean, why not?
Listen, can you imagine having 2 or 3 properties under your belt at 19? I mean, that's
20. I cannot.
I got a guy. He's buying his second home. He's 20, not even.
Wow, that's incredible.
Awesome.
That's amazing. So that's cool. So let's dig into some other stuff that we talked about. One of the things with COVID now, I keep saying, instead of it being in the rear view mirror, it's in the side view mirror.
Can
so
see
when you're past and it's in the side. So we're seeing it yet, but it's not quite behind us.
Right.
The good thing is it's not in front of us anymore, COVID, which is,
yeah.
I think is good. So with that happening, what is the biggest issues you're seeing? I mean, are people coming back to work? Are people, are the banks still really worried about, are they getting laid off? Are they going to be furloughed? Are they going to be, all these different things? What's happening in that arena?
Yeah. I mean, there was a lot of uncertainty with jobs and with, people's work, just finding it, getting it, keeping it. So we are seeing a rebound, but it's still, your 2 years plus of consistent work history is going to not win out, but it's going to be a lot easier to get you approved than an hourly employee that worked at, Best Buy, then worked at, Home Depot, not just retailers, but even if it's a Gauge personnel. So it's always going to be the more consistent income, work experience, even if it's in the same trade.
Yeah.
So if you're an electrician and work for ABC company and then transfer to XYZ, no big deal.
Yeah. So what if somebody is laid off or furloughed because of COVID or whatever it is? How long do they have to be back before we're okay?
3 months. I mean, it's
3 months,
but it depends, because if you're working in the same industry and you were just furloughed, then you just need, and you were hired back, we just need to see 2 pay stubs in a row.
Okay. So just 2 pay stubs, because that just showed, because basically they were furloughed for a reason. It wasn't, and it's not like the economy's tanking. It's just that they couldn't go, or whatever. Some people just couldn't go to work.
The owner, that's
true. I mean, if you couldn't go to work, you're not getting a paycheck,
and it's not something you can do at home. Like, the majority,
exactly. It's amazing.
Yeah.
So okay, so let's go into now. Somebody has some. You have had a couple of my clients where they've had some credit issues, and I like to let people know that it's not the end of the world.
No, and it's common. I mean, listen, we're not perfect people, and sometimes it's, you got to decide on. And I know it sounds cheesy, but you got to decide if you're going to pay your car payment or put food on the table.
Right.
So it's common. There's nothing to be embarrassed about. It's all in how you address it, really. Taking ownership of it. And my biggest concern is that people try to fix their credit before they're ready, or they'll try to buy a home before their credit is ready, or before they have the means to fix their credit. Because what I'm doing is I'm going to help you as much as I possibly can, but I can't go make your payments for you. I can't get that payoff letter you need.
And that's smart too, because there's always that balance between what does the bank say I can afford or I can do. I mean, the lenders will give you money. Let's just say it at 590 score or 630 score, whatever it would be, a score that's not optimal. They'll give you money, but your rate's going to be higher.
Yeah.
And so if you're really close to that gap, if you're 10 points away from getting that better rate that you're going to have for 30 years, it definitely makes sense to try and fix your credit by 10 points, right?
Oh my gosh, yes. Yeah. And in some cases, it can save you
a lot of money.
Yeah, a lot of money.
Yeah.
And even think about that on refi. So if you're trying to fix your credit, in some instances, okay, your credit score is not that great, but you got to think about, even if you can consolidate so many other things at, say, let's just say it's 5% home interest rate, but you're consolidating 8, 9, 10, 12% of debt. Give yourself that, that time to have one payment, which is your mortgage, and do debt consolidation. Then when you're ready to buy a home in a year, now you've got all your debt together, and now you can go call a realtor and say, listen, this is all my debt is here in my house
in one place. Yeah.
So
and
it might be a year out. You might come to me and say, I want to buy a house. I might say, let's get your debt in order, but it might take as crazy as it sounds, even if they want to move in 6 months to a year, that's plenty of time. We get it all together. We start making some quality payments. Your score's going to go up. You got all your debt in one place, and now you can buy a home.
Plus, the other thing that's a benefit when you do the refi like that, or when you do any kind of a home equity or something like that, that interest is tax deductible. So so that's the other benefit, and obviously your credit cards and your personal loans are not.
Yeah.
So it's a good thing to think about too.
So just real quick on what they do. All right. So, I get a lot of,
when you say the credit people, credit repair people. or credit
yes.
enhancement people.
Yeah, but what clients will do. So if
okay.
they come to me
Yeah.
and I see they're, a little bit below or a lot of bit below, let me just preface this, but I've been in finances for almost 20 years, and it took me all of 17 or 18 to find a quality credit specialist, which I finally found.
Yeah.
And I'm not going to plug her, but she's great.
Right.
And she follows through, and she's busy
Good.
because she's not just taking your money. She's going to try to save you money on monthly payments to her, or whether she doesn't even need to help you. She can just coach you. So
that's great.
I'm going to do what I can internally by going through our credit service, Universal Credit. But again, if there's things that they can't help you with, or you're not able to do them on your own, then we get involved a credit specialist who should be holding your hand. And that's why you pay them.
I know you have a couple of my clients that are
yes.
talking to her. So it's cool. And I think I always want to let people know, buyers, anybody that's in the market that maybe doesn't qualify at this time, that you don't avoid or walk away from buying a house because of that. It doesn't, just because you can't buy now doesn't mean you can never buy.
Yeah.
I think it's really important that people have to understand that. Go see a lender. I tell people this all the time. Go see a lender. Okay, you think you know your credit. You think you know that you're never going to be able to buy, or you're in a terrible situation. Well, you know what? The only way you're going to be able to buy a house is to go see a lender and find out, what do I need to do to buy this house? What do I need to do to buy a house sometime? It might take you 3 years, but if you don't start today and 3 years passes, you're now another 3 years away.
Yeah.
So I just think it's important to, if you have the goal of buying a house at some point, talk to a lender, talk to Justin here, and at least get on the right path. And there's buyers we've had like that it took them 6 months, 8 months, a year till they could purchase. But if they wouldn't have started and been guided the right way, they would still be in that same situation.
Well, that's the point. Guided.
So, yeah, it's guided.
The mortgage loan officer, or even if you're talking to your bank, they should not be looking at a transaction. They should be looking at the complete relationship.
Yep.
And I don't know if you're gonna like this. Realtors too have to do a good job, because they can't just say, buy this house, get them approved.
Yep.
Early in my career, I bent a little to that, and it's never a good situation, because you're putting me in the position where I've got to try to approve somebody that's not ready.
Yep.
You're going to be wasting your time, because whether that lender approves you, ultimately, if they don't get approved in the end, now you look foolish because you have to go back to this.
Yep.
So
it's not worth it.
Agents need to relax a little bit, but that's why you trust your lender. You choose a lender that you trust.
Absolutely.
It's going to give you that information straight.
I can't agree with that more. If the buyer's not really truly ready,
they're not ready.
There's no reason to push it. All it does is make everybody very uncomfortable. In the end,
yes,
very uncomfortable.
It is very uncomfortable.
Yeah, and you're right. There are realtors that do that, and I know what you're saying. So we're gonna wrap it up soon, because we have stuff we can talk about. Since we're doing this every month, there's no reason to cram everything into one time. But as an over looking at the whole thing, is COVID still a major issue in the mortgage world? Are you still seeing the effects of that yet?
The guidelines have loosened a little bit, but yeah, I mean, we're gonna be going to be in the middle of this till the last furlough and the last, till you.
But it'll never be over. I don't think, completely. And that's why I think we have to just kind of get to the point where you go, okay, we're moving on now.
But it is, let me phrase this. So if you're W-2, good job, or even just consistent, it's all about consistency.
Consistency. So as long as you're consistent, you're fine.
Yep.
Yeah. So it didn't really matter then at that point.
Correct.
Is there anything else you want to talk about before we end this show?
No, I just want to wish my BC girls good luck against Wilson.
Oh, wow.
I pay taxes to Wilson, but my daughter plays for BC lacrosse.
So this is the last time Justin will be on, just so you know, because I am in Wilson.
I'm in Wilson. My son goes to Wilson.
I'm just kidding. Just kidding. So Berks Catholic has a big game tonight.
Wilson. I know a lot of the girls on Wilson too. They're all
that's cool.
Girls, so I'm excited. It should be fun if it doesn't rain.
That's cool, man. Really cool. So you're going to be back May 20th.
Yep.
And we're going to do it at 1 o'clock.
1 o'clock.
I think so.
1:30.
I'm not sure if I have that right or not, because I was here. But yes, so we're going to do that at 1 o'clock on May 20th. Come back and listen to us. And thanks again for listening. We really appreciate it.
Thanks, guys.
good. All right. Well, actually, we're gonna end up the live thing. So that was good. It was a good show. What's that? Yeah, it's fun, right? A lot of fun. So yeah, we're done with this show. We're gonna end up the live streaming. Yeah, I don't think we had any questions on live streaming. I mean, we can look real quick, see if we had any questions. That's right. It's all right. You just gotta given up on people. It's all right. No problem. Let me just see. Let me go to my real estate new page. People are probably like, yeah, you're fine. Nobody asks any questions. But just in case. Just in case.
It's crickets.
Yeah, right. There's crickets going on. Hey, we even have crickets on this show, just so you know. Oh my God, yeah, I have crickets. Oh, I got sounds. Hold on a second. You want to hear crickets? I'll give you crickets. You ready? So this is what happens. Oh, wait. All right, well, let's do this. This is what happens when you don't know what the hell you're doing. That's how many questions we got right there. That's the amount of questions. So let me.
Oh my gosh!
Or you can do.
Let's
just see here.
I will literally be reaching.
You'll be reaching over right now. That's the
just
funny
like
part.
I did for the people.
So yeah, I think we're still going here. So it doesn't. I don't think we have anything. So we're good. We're good.
But please, if you're listening, write in.
New comments. Hold on. New comments. Let's see. We're gonna drag this out as long as we can. Maybe because we're live, it doesn't allow me to see this stuff. Is what I'm thinking.
Oh, that would stink.
Yeah, I know it would stink, wouldn't it?
That's what we.
Yeah, it's kind of what you go for, but. Yeah, well, that's all right. We're good.
Should we get a hotline?
Yeah, we should get a hotline. Bat phone would be cool too. I've always wanted a bat phone.
Corona.